Good morning, ladies and gentlemen. Today is April 8th, 2020, and I'm back with another Wednesday edition of the Investing Systems Trading Service live show. And the market is closed this Friday for Good Friday, in case you weren't aware of that. So we get a day off on Friday, I suppose you could call it that. And a lot of craziness in the market lately, and we're going to take a look at some charts. And of course, we have just a couple of open trades right now. We'll look at those. We have some pending trades, and we'll dive right into it here. To start off with, I have a chart of just the SPY with nothing marked on it. One of the things that I like to do is have the S&P 500, the SPX, with a whole bunch of marks on it and levels and trend lines and all that. And I keep my SPY chart like literally nothing, not even any moving averages on here, just so I can get a real nice clean view of where the market is. Interestingly enough, yesterday, well, we had a pretty wild end of the week last week, right? We had that big gap down on Wednesday, like when I was doing the show a week ago Wednesday. The market kind of rallied up off of this pivot low. And so Wednesday, Thursday, and Friday just kind of traded sideways in this lower range. And then of course to start the week there was a lot of optimism. And interestingly enough, so on Monday, we had that big gap up, a significant gap up, and I think it was like what, a 7% rally or something crazy like that. I mean, from the previous day's close to Monday's close was like almost roughly a 7% rally in the markets. And then of course, after something like that, you get a big gap up yesterday, and it's not uncommon, like we've talked about many times here with individual stocks. You can't really, I wouldn't really call this a long range day because of the gap up, but in theory, it was a huge long range day in the market. And then you had a significant gap the following day higher, and it wasn't, it wasn't a big stretch. Once it started fading, the more interesting thing was how the end of the day was really weak yesterday. So if you look at yesterday's open, and I'll show you this in a minute here on the regular S&P chart, but what's really sort of unusual about yesterday's open and that level where this current rally seems to have run out of steam is that it literally matches up with the close on these 2 days, on 3/9 and 3/11. And if I zoom out on here, here's where everything was fine, um, no problems. Then we started to get a little bit of a sell off, and by this day right here, I'll circle it. By this day right here, everybody thought we had seen a really super significant sell off. I saw they brought in a couple of the usual suspects on CNBC that were telling everybody to buy the dip right here. Buy the dip. This is a great buying opportunity. But anyway, and then of course, we got this little sell down, and then you had this kind of oversold bounce here, and this is the type of price action where again, everybody thinks the worst is over right here. You get a sharp sell off, and we had that big gap down and reversal candle and a little bounce there, and so that was the proverbial dead cat bounce, right? And then of course, obviously we can see what happened after that, and so right now the market's basically, we've got this perfect sort of outlier pivot low. And when I say outlier, I mean that it's outside the range of all the normal price actions. So that's like absolutely crucial level down there, and remains to be seen whether there's so many people. When you bounce over here for a few days, everybody's talking about retesting the low, and then the further away you get from it, the less likely it seems that you're going to retest the low. And if I had to guess, if I had to guess, and I'm not really very good at guessing, but I'm not really in the retest the low camp. I think that if we go back down to this area, I think we're going to take out that low significantly. So, but then again, like I say, I certainly wouldn't bet on that, but this is the big level right down here, I think. So, it's going to be interesting to see what happens. This bounce is significant too, right? The funny thing is that at some point over here, the Wall Street Journal, the market bounced 20 more than 20% off of the low, and so the Wall Street Journal proclaimed that it was a new bull market or whatever. The bear market was over. So I don't know, but anyways, some big levels here to keep an eye on. Yesterday's high is an extremely big level, but there's resistance all the way back up here, and so in the back of my mind, I can't help but think that like all the headlines the past couple of days here have been like, especially at Reuters. I always check the headline at Reuters for why the market's moving, and the big headline over there was that the spread of the COVID-19 is declining or whatever. Hopes that it's starting to the curve's starting to go down or whatever. But quite honestly, the repercussions the repercussions from shutting down the economy and all these people unemployed. Geez, 10 million people have filed for unemployment, and I'm sure a lot more will or trying to or whatever. And so the repercussions from this whole crisis are going to be more long lasting than I think a lot of people are thinking right now. And the other thing is that there's so many of these money managers come on CNBC and they're like, oh yeah, well, we're looking out a couple of quarters, and the second half of the year, and for this and that, and so they're hopeful and optimistic or whatever, but I'm not so keen to just shrug off the idea that there's gonna be long lasting repercussions. I mean, we're not a recession is officially 2 quarters of negative growth, and we haven't even officially seen the first quarter of negative growth yet. So I imagine that's imminent. Um, but anyway, long story short, so there's some levels on the SPY to watch. I think that I also think that like this area right here. I mean, there's a lot of support too, right? So this area from last week here is probably a big support zone, especially the lower end of that. So anyway, I'm gonna flip over to my S&P chart, but before I do, I wanted to draw one thing on here. This is something that I'll be keeping an eye on. Is obviously we got a rising trend line now. So we had a falling trend line here, right? Falling trend line, and now we've got a rising trend line, and of course, here's the thing to totally ignore is, I mean, if you didn't look at a chart, if you were just watching like CNBC like I do, and they talk about, oh, the market's up this much or down this much, or this percent or that percent. I mean, it's all just kind of, it all just turns into a fog. It doesn't really tell you anything. And, they'll come on and say, oh, it's the worst month since 1931, and it's the best week since 2008, and it's the worst day since this and that. And so it's just all a bunch of like really confusing numbers and statistics. And and the way that the market's gapping around here and moving so significantly, all those numbers don't mean anything. And so when you just look at the chart here, we had roughly a 37% sell off, I believe, from high to low. You can call it 35, 37. I always like using the intraday high to the intraday low because that's where, that's the actual number, like where the market traded, and then of course we're just talking regular hours. So anyway, So, I'm not going to bother to draw fib on there, but some people are talking, well, actually, maybe I should, just for the fun of it, because there's still people talking about, a 50% retracement. We didn't quite make it there. One of the reasons I like to use the SPY, aside from not having any indicators on here, like I'm going to clear all this off so I have my clean chart back, but I use the SPY because the open is the most accurate, like the actual S&P 500. The open, like the first 5 minutes is always kind of suspect, right? So sometimes you'll flip from SPY to SPX, and like you'll see the SPX opened and then popped up or whatever. So it's a little bit different. The SPY on an intraday basis, I think more reflects like the actual open, especially this early in the morning. So there we go. There's the. It's uncanny how these levels work, but and you guys know that I'm not a huge fib guy, right? I mean, I only really draw the fibs and use them under certain circumstances, and then I don't. I'm not going to sit here and tell you that that the market's going to go to any of these fib levels. I just like to see where they are. Mainly, I like to see, where 50% is, right? Because that's pretty common for, a stock or a market to move in one direction and then retrace about half of the move or a third of the move. So there you are. But with this type of volatility, I mean, we're seeing just extraordinary volatility, and so an S&P move of a couple of hundred points in either direction can just be normal, sort of normal price action. So anyhow, keep an eye on this trend line. If for some reason we start to sell off again, and here's here's the other thing: the past couple of days, Monday and into yesterday morning, I think everybody was like really, like the sentiment sort of turned on a dime, right? Sentiment these days seems to just change really quickly, and everybody's freaking out on the sell-off, and you get a couple of good up days, or you get a little bit of up price action, and then all of a sudden everybody acts like, oh yeah, well, the worst is over, we think the great buying opportunity, market's going back to the highs. So um, and right now, I mean, it seems like there's people that are at extremes on both sides of the fence, right? As far as like the market rallying back up and this being the low, and then other people, are like have price targets. Interestingly enough, you really to do anything, and let me go to the SPX here. With this kind of movement that we've seen, I think you got to go to the weekly chart to even really get any good perspective. The weekly and the monthly charts, right? The monthly chart's not telling you much here because we're still like right at the beginning of the month, basically, only 8 days in. So weekly charts got some pretty good perspective. This level was huge when we broke that level, because that was the lows from back here towards the beginning and the middle of 2019, and so that was sort of the level that below that, look out. And it was kind of like similar to this level way up here, where you had several weekly lows at one point, and so when you broke below that, and that happened quickly too. So there's bull traps and bear traps everywhere, and quite frankly, I think that, well, I'm certain that you know when this trend line broke and when this market started falling or whatever, it happened so fast that this is the proverbial bull trap. Honestly, the proverbial bull trap was this little area up here, because this sell off right here was due to the COVID breaking out in China and all that crazy stuff. And I mean, I was seeing on the evening news about what was going on in China back over here, and that caused a little bit of a sell off. And then the market bounced for whatever reason, like sort of whistling past the graveyard and pretending that it wasn't going to be a big deal anywhere else or here. And then reality set in pretty fast, and so the bull trap was, this week or couple of weeks of highs here when, and quite frankly, I'm still shocked that so many, yeah, so many Wall Street professionals or whatever didn't see the writing on the wall at the time. And if you went back and reran the tape up here, the complacency was overwhelming. And so, and of course, I'm not a Wall Street professional or a money manager or anything like that, but I'm just surprised. I'm surprised that more of them weren't sounding the alarm, up here. But once it started falling, instead of and it's pretty typical. But once it started falling, instead of telling everybody, hey, get out of the way, lighten up or whatever, it seems like the conventional wisdom was like, yeah, well, we may get a little dip here, and they always like to come on and say, oh, if we get a 5% dip or even a 10% dip, well, that'd be a good buying opportunity, right? Good opportunity to load up on some quality names. And so maybe I watched too much CNBC, but anyway, so when all hell broke loose, I don't think many were expecting 37% down, but all it takes is a little rebound like this to get everybody sort of excited again about the opportunities. I looked through a gazillion charts, but this is one I just want to bring up a random stock here to show you sort of how it goes, right? I mean, this stock was, $82, Kohl's retailer, $82, and I mean, look at it. It dropped down here. The low last week was under 1089 was the low. So, from 80 to 11, and then, it rallies like you get like a 20% rally or a 20 something percent rally, and so like I was saying before, in a vacuum, if you're just if you're not looking at the chart, you're just watching TV, you think, oh man, huge rally in the stock. But I'm just going to tell you that for this stock to rally back up to where everybody was holding it and recommending it, it could either take years or never. I mean, I can go back and show you monthly charts of stocks that literally never recovered from the dot com sell off, which was 20 years ago. And there's same thing. 2008. There's a lot of stocks that never recovered from the 2008 meltdown. And as far as individual stocks go, there's going to be tons and tons of stocks that never recover, right? And so this is actually, I mean, some of these retailers, they're still a good company, right? I suppose, when they open their doors back up and people go back in, start buying stuff. But for this stock to just regain, like just the sell off, is going to be a huge feat. And so I think there's a lot of people that are trapped in a lot of stocks that here's something else I wanted to look at. Here's a good example of what I'm talking about here. The XLF, right? The financials. Um, this ETF goes back to 1999, as far as I can tell here. So yeah, because if it this must have been when it launched because this is a monthly chart. Anyway, so here's the idea, right? Is this is the big money center banks and primarily and there's a couple of other financial ETFs that are like regional banks, smaller banks. But so here you go. You had the big rally up here, and then the sell off. The great financial crisis, right? This was the great financial crisis. Started in '07 and ended in '09, and you can see I have a log scale here. You can see what happened. So XLF was trading at 30 bucks, 31, and then down here it dropped. The low was 477, but dropped down here to the vicinity of $6 on the monthly chart, and then so from here to here where it was hitting highs again. just a couple of months ago. This is January and February up here at the highs. I mean, what you're talking 12 years, right? 12 and a half. So 12 and a half years it took, the financials ETF to get back to, the prior highs. And then literally, like, as soon as it did, now we have a new crisis. Right? Which is basically, at some point, cut cut the thing in half practically. So it's going to be interesting to see. I read, there's actually a lot of interesting articles coming out now about, the financials are really sort of something to keep an eye on, because I keep seeing all these articles where, like these restaurants and stores and that aren't paying the rents, right? And so, the whole mortgage business. And then there was another article on CNBC yesterday about forbearance. I guess the CARE Act, or whatever the legislation they just passed, has a provision in it where if people ask their, I think it's on first mortgages, if they ask for a forbearance, meaning, that they're going to hold off making payments, that, like, legally, based on that legislation, that the bank or mortgage company or whatever has to approve it. And so you got a lot of, and there was like 2 million of them or something. And there's everything's still coming in fast and furious. But what it boils down to is, millions of people aren't going to pay their mortgage for 90 days. Right? And then, of course, you've got individuals, and you've got, restaurants. And I think it was Cheesecake Factory was the first one that I saw that said that they're just not going to pay their rents on their properties or whatever. And I'm sure lots of stores are doing that. So anyways, it's going to be a mess. And so all that kind of stuff snowballs, right? And of course, hey, the Fed is creating, trillions of dollars I mean, there's really, like, what, four too big to fail banks. Right? So here, this is always looking at Citi. Now, I do have this on, I have this on a log scale. So City's always a fun one to look at. If you actually look on a linear scale here, it's a lot more dramatic, right? So if you guys recall, during the Great Financial Crisis, City dropped to $1 a share, and then they did a reverse split. The low here says 970, so that would have been 97 cents, but basically, and then they did a 1 for 10 reverse split. So right now it's trading for $4.27 if you were to take out the split. But anyway, this is just, and of course, Citi right now is obviously as a too big to fail bank. This is just a good example of, well, this is probably the best example you'll ever see of a stock that never recovered from a financial crisis. And of course, like I said, Citi's too big to fail. But there you go. Citi, you see, you like to look at something like this just to get the perspective of what I'm talking about when I say some of the stocks, like right now, that are super beaten down, will never recover. I just, or it's doubtful that they'll recover. And this is probably the best example that I can find of a stock that never recovered. Here's another one I like to look at. I always like to, here's the thing is, like, back in the .com days or whatever, I was in this back in the .com days. I was in the markets when stocks were still trading at fractions. Intel's always a good, this is good perspective too, and I'll tell you why. Is because, obviously Intel, this was the .com days, and they, great company, they made the personal computer possible, right? And since then they've done great things, but again, with the perspective, here's a company that, 20 years later is still, 20 years later, as great as Intel's done, and nothing wrong with anybody that's bought Intel in the past, X amount of years has done great, actually, since the great financial crisis. But when you look at the perspective here, you can see that, that Intel's still a long ways from, hitting what they call an all-time high. There's 52-week highs, there's, multi-year, but there's also, the all-time high, and Intel's got a ways to go before it gets back to the all-time high from 20 years ago. And so I think that you have the same risk in this market right now. I think that there's likely to be companies out there that, you'll come, if they survive, you'll come back in, years, and it will have still never gotten back to the high. So anyways, that's sort of this is more of a cautionary tale about thinking. Look at GE. GE's maybe even more extreme of an example, because back in the dot-com days, I mean, this look at this run here. This was almost, and I don't quite understand why, but from 1995 to the top, GE was, I mean, it was a blue chip. It's what they call a blue chip stock. You don't hear that term that often, but I mean, they were, something was going on. They were firing on all cylinders, and so I mean, for almost 5 years here, this thing would just had a parabolic move, and it was extraordinary. I was practically a 10 bagger. Started off down here around $6 and ended up at 60, and it was one of the preeminent companies in America. And somewhere along the way they lost their mojo, but I mean, here you go. I mean, back in these days, if you said, hey, if you told someone, anywhere around here, hey, 20 years from now, GE's gonna be, back at $6, $7, they'd have thought you were crazy, because this was one of the preeminent companies in the world, right? So, yeah, I mean, it used to be in the Dow. I'm old enough to remember when GE was in the Dow. Anyway, so you can see what happened, the great financial crisis, right? I mean, it was already struggling, but anyway, long story short, I mean, this is just incredible you know how they're like retesting that area, and so it's pretty amazing. These monthly charts are insane. Look at Ford here. Ford was, Ford's another one that, back in the late 90s or whatever, it hit that high, and so, I mean, great American company, history going back to Henry Ford and that, but, here we are 20 years later, and, you got a $40 stock is in the fours, right? And it wasn't really a cakewalk in between. It's lots of ups and downs. And so I mean, basically, every chart that I look at, um, every chart that I look at is gives me the perspective, and it's good to go back and look at those time frames. And so, I mean, Ford might be a steal here, right? Like this thing, things get back on track or whatever, and you look way out down the road, and I mean, this thing could easily double. But then again, you look at that monthly chart, and it's not likely to. These things take time, right? So, best thing Ford's got going for it right now is this higher low. So this is the kind of I remember during the great financial crisis, right? Like GM got bailed out. Funny thing about GM, and I didn't mean to get off on a tangent here, but it's always every now and then it's good to change it up. So I drew a horizontal line here, like in theory. Government bailed out GM, and so the IPO of the stock was in November of 2010, which is hilarious, right? Because I mean, General Motors has been been around forever, but hey, the stock chart starts from when they I won't call it re-IPO'd, but whatever. After I mean, they basically went belly up great financial crisis, got bailed out or whatever, and then the stock starts fresh. And geez, look at it, you know? So we're in kind of a mess right now. And, going back to just going back to the regular chart, there's a lot going on behind the scenes that I'm sure I can't even process all the news anymore. I mean, there's just so much news and so much. And the worst thing is like everything's subjective now. Everything's opinion. There's two sides to every story, and half of everything is being reported with like some sort of a bias or a political slant, and half the news is propaganda and the other half's opinion. So um, the only way to like really remain objective about the market and the stocks is to look at the charts. So with that said, here we are with the S&P. Oh, so real quick before I forget, um, there's the weekly trend line that makes a whole lot of sense, right? And I adjusted this a little bit. Like a few weeks ago, I had this down at the tail of this candle. You can see where I have this trend line. Let me zoom in here. So I moved it to just under the body of this candle, like the body of this reversal candle from back here. This was the sort of the bear market of the end of 2018. Anyway, interestingly enough, look at the past few weeks here. That's acted as a resistance point, and prior to this week, the past 2 weeks, like the high was right underneath that. So now that we've had like this sort of relief rally here, you can see that this level sort of acting as resistance a little bit, and so I expect the market to chop around in a big range. It's a long way down to the recent lows, and I think that the powers that be are going to do everything that they possibly can to prevent this low from being taken out. So that remains to be seen. But anyway, I mean, we could be looking at, typical range on the S&P now, like 100 points is, this thing could go 100 points in either direction, just based on whatever, just kind of like fish swimming in a school. But there's humongous overhead resistance. So the upside would probably, the upside on this is probably 28, call it 2850 is like humongous upside resistance. Actually, yesterday's high is probably the best. Yesterday's high for now is probably the best, point of resistance to keep an eye on. And then you've got Monday's low. And so everything between Monday's low and yesterday's high is just kind of it's kind of the range or whatever. So anyhow, let's look. We only got a couple of open trades here. I mean, we had a couple of really good ones that they got closed, and the volatility in individual stocks has just been extraordinary. But let's just look at these real quick. Gilead. Past couple of weeks we've looked at this. This has like massive volatility in an uptrend, and it's sort of like a zigzag pattern. So, um, and it's a lot of noise here, and so it likes it's kind of following it's following this trend line up, right? And I mean, it's hard to it's hard to predict what this thing's gonna do, obviously, but it has a tendency to spike up and then pull back to this area and spike up. And so now it's kind of in pullback. It came within pennies of the target, like literally like right after it triggered. So anyway, it's kind of a news driven stock right now. We'll just have to see what happens with this. Stop's come up significantly. It's been sort of trailing under that trend line, and it still is. And so basically it's just a matter of whether. And I mean, look at the low yesterday as opposed to where the close is. And so it has a habit of selling down and then having a massive reversal. So it's still looking okay. I mean, it's down a little bit from Now at this point it's down a little. But yesterday, yesterday and the day before it was over the trigger, and now it's down through the trigger. And so, be looking for, it's one of two things going to happen. It's going to tag this stop, or it's going to reverse and spike back up here towards the 80s. So it is what it is. And the other one here is this ZTO, which which turned out pretty good, really. A little bit of a lower price stock, which is fine, but triggered in over here, and has sort of been in an uptrend, and has basically, the nice thing about this is that I mean it traded like it traded right at the trigger price, right? Like it triggered this day. Well, I shouldn't move that, but it triggered this day with the close right there. And then so the following morning, which was the Friday or whatever, it gapped down and then pushed right through the trigger price on the upside. And so I mean, in theory, anywhere in this zone right here would have been reasonable entry. This is one where, and this doesn't happen a lot, but with all these gaps, if you get a stock that triggers in and has a close, like said the trigger was 25.30, and then the day that it triggered, it closed at like 25.75, but then the next morning it opened below the trigger and actually ran up through the trigger, and so that would have been the spot to go ahead and get in somewhere in that zone. So call it 25.50. Anyway, it's had a pretty nice run up, and it's gone through the target, and so basically traded right back to the high there. You can see that. So whether it's able to push through that high, or whether the run up to the high sort of made for double top, and now it's going to cycle back down. There's some extreme volatility prior to this thing triggering in, so there's just no telling. There's no telling what happens from here. But I mean, the thing of it is that it hit the target, and so that's kind of what you want. The fact that there's only two open trades right now, and we just looked at both of them. The fact that there's two open trades right now kind of makes sense because we've had this pretty big run off of the lows, right? And so, like yesterday morning, people that were excited because the market went up 7%, and then it was trading higher, yesterday morning. Well, that was a little bit of a trap there, because you don't want to be late to buy in the run up. And so and so now, I mean, the market's trying to decide whether, I mean, yesterday morning, there was like this little sort of spike up to 27.50, and then it was all downhill from there. And so, like I said, 27.50, big level to watch. And so we're about 100 points below that now, roughly. Starting to climb up a little bit today, but there was a couple. Let's see, TDOC. I just want to look at these these couple that closed here recently. Actually, I hadn't marked the. It was 147 was where this thing got stopped. So, and you'll see this with the kind of volatility we're seeing. You're going to see things that are sort of out of the ordinary, and one of them is the gaps, right? I mean, the gaps that we're seeing right now make everything a little bit trickier, but the stop on this was 147. And so what happened was, on Monday, it gapped down a little bit and then came down and tagged the stop and then recovered. But as you can see, it kind of made sense to, this is why it makes sense to take these stops or whatever. But it basically, prior to that, it had run up and tagged that target there close enough. And so, and Jeffrey and I talked about this last week, kind of a run up and then a humongous long range day and a big gap. Um, if you've gone back and seen, those of you who've been around for a while, seen like the price volume crescendo thing, price volume crescendo. So that's what we talked about last week. So anyway, this thing at one point was up, was 25% higher than the trigger. It just so happens that the trailing stop came up, but so it got stopped out with with just a minimal sort of gain as opposed to the move that it actually made. And then this one's even more interesting. EHTH, right? Really nice trade here. Triggered, blew up through there. The stop moved way up and all that. And then this morning, look at that gap yesterday. This morning, I think Muddy Waters comes on CNBC and said that this is their new short idea. And so I don't know if you guys saw that, but it's a little bit of yeah, to have some guy, some prominent guy on come on CNBC and like spend 10 minutes talking about, why they're shorting this stock after they've already shorted it, obviously. Boy, that's like sort of it's a little shady, actually, if you ask me. But here's the thing: is like our system, obviously our system doesn't, look at the financials of the company or whatever, and so this just happened to be one of the picks in our database or whatever, and so thankfully it worked out okay ahead of like Muddy Waters coming out and trashing this company. I should probably make sure that you know that we don't get into the thing again, because here's another one like Zoom, right? This was super popular stock and all that, and it's sort of this thing probably crushed a lot of people too, because what happens is you get the real popular stock everybody's talking about, and while the market was falling apart, there's a handful of stocks that were actually doing good, and this was the big one that was in the news or whatever. And then you get people that they chase these kind of stocks, or they're late to the party. They hear about it a week or two afterwards. And so, but this ended up, this same thing, just in a few days, just exploded higher through the target, and then had a second sort of shot there, and then that's all she wrote. And so I just wanted to look at that because a couple of, and now the volatility is starting to settle down a little bit, and so hopefully we'll start to see a whole new crop of companies come through. Yeah, this is probably, these guys are probably viable for at some point. This may show back up as a potential. May show back up as a potential. It's had a nice sell off here, and kind of looks primed for a rebound. But anyway, just looking at a few of the closed trades here recently, and so what I wanted to look at real quick before I wrap this up would be the pending trades that we have right now, right? So we haven't had anything since this ZTO triggered in back over here. We haven't really had anything that's triggered in. So that's a little bit due to the fact that the markets rallied up for the past couple of weeks off the lows, and so quite frankly, it's due for a little retrenching. Oh, real quick, let me go back to this. This gap right here. Just go back to this gap right here. Looks like on a pullback anyway. That looks like a pretty good gap that could probably use filling. Right, so just keep an eye on that. If we see continued weakness, that little sort of spot right there, and you can see it's on both sides of last Wednesday, Thursday, and Friday. So that seems like a pretty good level to sort of keep your eye on. So okay, so real quick, let's jam through and let's look at these stocks on the pending list. So this DocuSign is, as you can see, the crazy wild price action. But a lot of these stocks, you had some crazy price action. Things are starting to settle down a little bit. It's actually not a bad looking stock. Um, it was in a nice uptrend, and then in February, this thing just sort of, there was like there was a little parabolic run up. We saw lots of these. I mean, the market itself kind of did this, but this is This is a recent IPO too. I don't say recent, but it IPO'd back here. But you can see how crazy this price action has gotten. But this is this is kind of viable. The trigger price is still way up here, and so ideally, um, a lot of time goes by and trigger price comes down. The price action sort of settles down, and this is kind of turning into like sort of a pattern here, but it's got a ways to go, right? Like it could sell down further than this low here, but just looking at the recent price action here, that's kind of where this thing is, and of course the entry's still like up here. So the idea being that like way out here in the future, at the proper point, this thing sort of settles down, and then makes a move like that, right? And then maybe the trigger price comes down. I mean, it all depends. Like this, the triggers move based on the price action that transpires on a day-to-day basis, and so it just really depends. I mean, if it were to like stay in this range and congest and tighten up or whatever, then that trigger may stay where it is. And so let me get rid of this. There we go. So theoretically, and it never plays out ideally. That's very rare, but ideally, the stock would sort of congest and squeeze down into this area, and the trigger would slide down from where it is now out to over here, and then boom, catch the after this pullback's over, catch it on the way back up. But I'm gonna delete that stuff off of there because it's just basically that's pure conjecture. So as of right now, it's potential stock. The Chinese stocks are kind of getting out of favor now because a couple of the Chinese stocks or whatever are suspect. I'm sure you've heard about that, but this JD is still hanging in there pretty well, and so this is on the pending list too. Right now, it's just in a big consolidation. So, um, hey, this could. What happened over here? Looks like it triggered in and poked at the target and came straight back down with all that volatility. So, not too exciting. I'm not extremely optimistic on some of these Chinese stocks, and this one's kind of interesting. 5.9, 5.9. I don't even know what these guys do, but I'm thinking of what am I thinking of? I'm thinking of that retail five something. Oh, I was thinking of Five Below. Yeah, yeah, Five Below. Okay, there's your Five Below. Huh. It's interesting that's well, I guess it's lost half its value. So anyway, its FIVN is. I mean, this thing is literally up at the highs here. So that's kind of interesting. Talk about a rebound. Um, big sell off along with the market, and then a rebound back to the highs. So this is pretty darn close to triggering in. The trigger price on this is 79, right? You can see it's trading over the trigger price as we speak right here. And so basically a close over 79, this will trigger in. And so, yeah, boy, I got to tell you though, after this move up right here, my guess is that, if this thing does trigger in, the initial stop will go probably somewhere down. But I might as well mark it because this is about the closest thing to triggering in that we have right now. And so, yeah, I mean, I would guess that the initial stop probably be somewhere around, 71 something, maybe 72, probably in the vicinity of these two recent lows here. So, stock like this, though, obviously they got something going on here for this thing to be exhibiting this strength, And so we'll see. We'll see if this thing triggers in. But keep a close eye on this because this looks like it has a very good chance of triggering in tonight. And keep in mind the market's closed on Friday, right? Like I said, so tomorrow is basically the last trading day of the week. Everbridge, another extremely volatile stock, and in the kind of volatility that we're seeing, it makes sense to, even though we're trying to swing trade here, though, you get into something that makes these kind of moves here, right? I mean, this is like from this low to this high is 35% probably 40%. Anytime you get some extraordinary move like that, it's not a bad idea to just go ahead and lock it in. If for some reason like this thing triggered in, say next week or whatever, and then had a massive spike up. So I can't even imagine like right now the 108.50. I actually have that marked here. 108.50 is the trigger price here. So we're looking for a close over that. Now that can change, right? Say this thing spends 3 or 4 days like down here and never makes it up here. This trigger could, this thing could come down a few bucks. It would take something like this. Like if you had, for whatever reason, if you had like a period of consolidation like this at a lower level, then that trigger could come down and then trigger off of something like that. But for right now, I mean, this is another. It's kind of at the lower end of the range right here, right? This has been a pretty good stock, but the volatility just insane. But this could very easily. The best bet here would be not for it to not spike back up like it did over here and here, but to consolidate down here around $100 for a few days or a week or something, and then make its move back up because that way the trigger would come in. But there's every possibility that this thing has a big like massive 2 or 3 day spike higher up here. So it's another one to keep an eye on. Definitely worth keeping an eye on. So, and there you go. So, here's the thing: as the market sort of, I want to look at the Russell real quick here. As the market sort of settles down, the Russell actually looks kind of reasonable here, right? I mean, is the Russell 2000 has really been sort of it never made a new all-time high back over here. Like the all-time high in the Russell was it is in the fall of 2018. And so when all the other indexes were plowing to new highs back in at the beginning of the year, Russell 2000 wasn't doing that. But anyway, long story short, the Russell 2000's got a pretty nice little sort of congestion area going here. And of course, yeah, it melted down along with the rest of the market, but it's always kind of in a really good market environment, like a real, bull market or whatever, the small cap stocks tend to do really well. And so, in years past, I've always looked to the Russell to kind of, as a gauge more of like, what I would call the average typical stock as opposed to, the FANG stocks or whatever. So, anyway, it'd be interesting to keep an eye on that. One last thing, and then that's it, is I want to go to, and I haven't talked about this in a long, long time, but um, 60-minute chart of the S&P with the 1743 moving average. And those of you that have been around for, 10 years know about how this was, this is kind of our timing indicator. Let me go to SPX here. I meant to go to SPX. I guess they're about the same. Actually, I kind of like to look at that SPY chart. But anyway, long story short, 17 crossed down through the 43, and the price was below it, and that's when the big sell-off started. And then you got there was another cross right here. Right, this is kind of after the trend line break, and then you got the 1743 cross right there, and that was kind of the change in trend. And then this this was like the little whipsaw right here, right? And so, anyway, as of right now, and whipsaws are going to happen, especially in crazy environments. But right now, the S&P is still on a buy signal, theoretically, based on the 1743 on a 60-minute chart. It's on a buy signal until they cross back down. And so while there is, resistance and it could pull back and everything like that, it's still holding this trend line. Um, there's areas of pinch, and then there's areas where, and I'm gonna say that this was just basically a whipsaw. Every single indicator is gonna have periods where they either don't work or they get a whipsaw. And this was the proverbial whipsaw, meaning that you got like it gave the first buy signal here, right? And then back over here, it gave another sell, but there was no follow through to the downside. And then it flipped back to a buy over there. So for what it's worth, but and that doesn't necessarily, for me anyway, it doesn't necessarily mean I'm going to buy and sell. Given the moving average cross, and of course the price in relation to it, but at any point in time, it's given me an idea of like what the primary sort of, you know, the primary trend is. And so right now, it's flipped back to a buy. Primary trend is up, and obviously, that doesn't mean it can't fall down and flip back down, but it is what it is. And so that's one of the indicators I've been using for many, many years. And of course, you guys know the story behind that is that it coincides with my 9 EMA, right? The price trending below the 9 EMA. Hang on, let me go to another chart here. There you go. I got it real thick here. Price, breaks below the 9 EMA, trends below it, and then it pops back above it, right at the point where the MACD histogram flips. And so, there you go. There's the 9 EMA, which is a part of the standard MACD, right? Standard MACD histogram. Standard MACD uses a 9 EMA. And so I put the 9 EMA on a daily chart, and some people use a 10 simple, and some people use people use short-term moving averages of all different sorts of things. But um, it dawned on me playing around with short-term moving averages that if the price is below the 9 EMA and then breaks above it at the same time that the MACD histogram goes from negative to positive, then that seems like the moving average to use. And so the thing that digging into it, what I was just telling you about the 1743 EMAs on a 60-minute time frame coincide with the 9 EMA on the daily chart. And so anyway, that's like a little sort of timing thing that I keep my eye on, and most of you that have been around for long enough remember that, and it's still totally valid. So, you had this break and this little run above the 9, and then those 3 days were kind of that whipsaw I was talking about, and now you're back, back above it. So there you go. There's the underside of the 200-day moving average up there. Let me go back to the SPX here. So 200-day moving average is sloping down just barely, it looks like, and kind of going sideways. So I'd be shocked and amazed for a rally back up to the underside of that. I mean, that would be gargantuan, but everything's a function of price and time. So if they can keep this market sort of, and here's the other thing is that there's a lot of um, the administration and the Fed and the Treasury and all the big players, the Mnuchin and Powell, and I mean all of them, and everybody on Wall Street. I mean, it's in their best interest that this market sort of holds its own. And so you gotta understand that they're gonna do whatever it takes to try and hold this thing together. And so it is what it is. But you know, I mean, it's in nobody's best interest for the market to collapse from here because nowadays, I mean, the ever since the great financial crisis and ever since the Ben Bernanke days, the idea of the Fed has been to, I mean, the stock market is basically the gauge that the administration is using to measure how well the country's doing, and everybody's got their 401ks and pension funds and all this stuff, and so the United States has sort of bet the farm on, the equity market, and it's in nobody's best interest for, it's in nobody's best interest for this thing to, to fall apart. And and I mean, you remember what happened back here? I mean, they literally like back at the end of 2018, you know, I've got news clippings of Mnuchin calling in the plunge protection team. I mean, they literally intervened back here because things were about to get out of control, and there wasn't really a lot of good excuses for this market sell off here. We didn't have the type of crisis that we have here, but anyway, just keep that in mind. So, is the market going to retest the lows? Quite honestly, a V-shaped market recovery here probably would not be the best thing. I mean, somehow they pulled it off back then, but I'm always, I'm old school. I'm in the camp that the more work that the market does, the more sort of base building that it does at lower levels, rather than just launching off the lower levels and going straight back up, I think is the healthiest price action. The more volume you get at certain price levels, then the more support there will be, on the way back up. So anyway, I can't quite honestly, I can't tell you, what's going to happen from here. All I can say is that above yesterday's high is a pretty key level, with the caveat there's still tons of overhead resistance, and below yesterday's low is another key level, and we only got one more day, so today's very likely to be an inside day unless we see late day selling like we did yesterday, but we're likely to be inside this 2 day range here for for a period of time here, at least probably today and tomorrow, although you never know. I guess a lot's going to just sort of depend on the news flow, but that's a pretty big range too. Um, 25.75 to 27, 56. That's a big range, and that's basically where we're in now. So support below, resistance above, and market trying to rebound here. And CNBC, I mean, geez, they get nowadays, a 200 or 300 point Dow move is just like sort of normal price fluctuation. I mean, yesterday the Dow was up like 900 and something points and gave it all back, right? So everything's got to be viewed within the context of the chart. So, anyways, hey, thanks for joining me for the show here. Hope you have a good long 3 day weekend. I know everybody's trapped inside or whatever, so hopefully you got some decent weather to work with. But I'll see you back here next Wednesday.